9:07 a.m. Eastern Standard Time. I want to go to the charts real quick, and then I want to show you what happened last night or yesterday. We had our first 50 basis rate point hike by the Fed since 2000, so it's the largest single rate hike since 2000. Actually, I don't even need to show you it, but I'm going to show you it at the end just so you guys can see it, so you can verify what I'm saying. And also, they're not going to start tapering off all of the, basically I call it the federal funds. They're not going to start alleviating it out of the market, which means take it out of your stock market, crypto, and all that good stuff until June 1st, which is why we had that pump yesterday, and it could alleviate, you know, a little bit bigger pump here we'll talk about. But yeah, we're down a couple percent across the market, but we're going to talk about what this all means, because 50 basis points yesterday, and then next month they might do 50, or it's not a might, they're going to do 50, possibly 75, like I keep saying. And now that they're waiting until June 1st, it didn't allow the market to crash yesterday, but it put the market on notice that we're going to have a crash between now and June 1st. So we're on notice. We are officially on notice. Matic. All of these two are on the top of the 20-day on the 4-hour time frame, so we're a little bullish to start the morning. Now, this is either going to play out like a bull flag or a real well-designed head and shoulders here, which does happen sometimes, but like I said yesterday, if we could clear this, use this as support, and I've been saying this for a couple days that we had to get up here at least. And then I said, can we get up to $1.25? Possibly. This bull flag, if it plays out, will hit that drop point perfectly of $1.25 area. So that's what we're watching out right now for Matic. I don't really want to go deep into these because we're in the same situation with all of these. So I want to focus. Today I want to focus on Matic and Shiba to start the morning. But with Matic, you can see that, and then in the 30-minute time frame, we're on the bottom side, which is bearish in the short term. But all we have to do is get back on top of the 20-day, which is that red line. But we're also bullish right now in the longer time frame of the 4-hourly, because we're on top of the 20 days. So it's conflicting here. In the very short term, we're bearish, but in the longer time frame, we're more bullish. But at any moment, we can pull down and break this formation, obviously. But to me, it makes it look like we want to come up to $1.25. And then with Shiba, we're at 2132, and Shiba's in a almost identical scenario, which is why I want to talk about it. Hold this 2118. We're on top of there. The problem is we're still on the bottom side of this ascending triangle with a much bigger descending triangle. But we have to, you know, like I said before, we can back test here. And that's just something normal that happens. So if you look at the 30-minute time frame, we got rejected by the 20-day initially. But we're still holding on. We can still make a pull up. And if the longer time frames hold, this should play out in an according fashion. And we should get up to about 2241. If it doesn't and this holds true, we'll just roll over and we'll come back down to the bottom at 1830. So there's not much, you know, in between for the market. So that's what I wanted to show you. Pay attention to that, because the whole market that we're watching looks exactly the same. So I want to show you this, though, what came out yesterday. It's very important.
Federal Reserve raising the target range for the federal funds rate by 50 basis points to a new target range of 75 basis points to 1 percentage point. The Federal Reserve increasing, says ongoing increases will be appropriate. The Fed will begin to reduce the balance sheet on June 1. It will ramp up the balance sheet reduction over time. It's going to begin with $47.5 billion in balance sheet reduction through August, and then after that 3-month period, it's going to reduce the balance sheet to allow the runoff of $95 billion a month as expected, and that'll happen beginning in September. That'll be a total of $60 billion in treasuries running off the balance sheet every month, $35 billion in mortgages. The Federal Reserve says household and business spending remains strong. Job gains have been robust. The Russian invasion of Ukraine likely puts upward pressure on inflation and weighs on economic activity. A very quick analysis, guys. There's one sentence in here that was a little more dovish than I expected, and a lot of other observers thought there'd be a line in here about the Fed moving expeditiously towards neutral. It doesn't say that. It just says anticipates ongoing increases will be appropriate. Doesn't say how much. We're going to have to leave that for Fed Chair Jay Powell, and whether or not he'll put some character on the pace and amount of tightening to come from the Federal Reserve. But as expected, 50 basis points and balance sheet runoff ramping up to $95 billion a month. Kelly?
Shepard Smith here. Thanks for